All right, everyone, now we move on to the crypto and reasons for its adoption remaining resilient across Africa, even though wider markets downturns. Our speakers would discuss the real-world use cases driving demand across the continent in this session. In Africa, crypto is still a bull market. Our moderator, Dr. Weyhan Olivier, partner and global co-head of digital assets at Forvis Mazars, and his panelists will help you find out his statement, if it's true or not. So get ready and please give them a warm welcome.
Hello. Okay, perfect. Thanks so much for the introduction. I really appreciate it. So in terms of the topic that we'll be covering today is we're asking the question whether the crypto market, specifically in Africa, is still in a bull market. But I think we find South Africa to be a very unique place when we speak about blockchain-based digital assets. I mean, if you think where we started off with the creation of the Bitcoin white paper and where we are today, I mean, even though it was designed to facilitate peer-to-peer payments over the internet without the intermediary, I mean, the asset class and the technology has evolved into something so much more, and something so much more in an African context as well, because we saw the creation of stable coins, we saw the creation of tokenization of real-world assets, and we see how it's integrating into the traditional financial system, but also to benefit Africa. Because if we look at various jurisdictions around the world, the technology in the asset class is being used for various different types. And I mean, in Africa specifically, with a large migrant workforce, underbanked, underserved population, there's a real benefit for us to tap into from a technological perspective. So, and that is a topic that we want to cover today and focus on the technology within Africa and the asset class within Africa. But I think before we get started, I just want each of my esteemed colleagues just to introduce themselves. Maybe we can start with Hannes, work through the way to Amar, and then we can start with the questions.
Thanks, Vian. Yeah, good afternoon, everybody. My name is Hannes Wessels. I'm the General Manager for Binance in South Africa, and delighted to be here.
Good afternoon. I'm Yali Wemlambo, and I chair the United Africa Blockchain Association.
Afternoon, everyone. I'm Callan Richardson, and I'm Head of Growth for BitGet Global. We're a licensed and regulated crypto exchange based out of South Africa, covering Africa as well.
Hi, I'm Amar. I'm the CEO of TD Markets and the TDM Exchange as well.
Thanks, guys. So maybe just to start on the first question, I mean, we see a lot of, let's say, mention of cryptocurrency, and it's being framed mostly focused on trading volume. But there is real-world problems to be solved, as I alluded to in the intro as well. So, Hannes, I mean, from your perspective, Binance having a significantly large footprint with over the African continent. So how is blockchain actually being used today to solve solutions, to get traction in terms of payments within transfers, cross-border payments, remittances, purely beyond that speculative asset class that we all know very so well?
Thanks, Vian. Yeah, I remind myself when I walk through the stalls here, this is firstly a trading conference. I think we've got that with our derivatives and spot. But South Africa is very different to the rest of Africa, and we must always remind ourselves that's the case. The moment you move north of the border, and we see this from Zimbabwe all the way to Nigeria and even north of that, it becomes a payment mechanism. It becomes stable coin, being paid on a peer-to-peer basis, using some of the payment rails, and it just fills that gap that traditional fiat can't fill everywhere. That's what stable coin does. It was initially designed as a trading pair, and all of a sudden people start using it for payments. And we see that working more and more. So it differs from market to market. South Africa, we see primarily trading, derivatives trading, spot trading, but then you move north of the border, not only remittance, but also payment. And the difference between the two, I think where we still need to knit this together is on the payment side is one thing for someone, you talked about migrant labor, for someone to send crypto from South Africa to, say, Malawi. The recipients in Malawi will still be able to spend that. And the next phase for all of us on the stage here will be merchant adoption so that people can take that to a merchant and spend it. Be that a big corporate, be that a boxer in Zimbabwe or SME in Malawi. We can fix that bit. I think then crypto will really take off.
I mean, it's interesting what you're saying there. I mean, if you keep on thinking about the possible potential of stablecoins solving that interoperability in relation to various payment platforms throughout Africa. I mean, then you start to differentiate between where does the advantage lie? Does the advantage lie in the asset class, or does the advantage lie in the technology itself? So, I mean, crypto is known globally, as we know, for volatility, and without Africa, we see a lot of volatility associated with local fiat currencies as well. So people might go to cryptocurrencies, and I'm specifically referring to unbacked cryptocurrencies such as Ethereum and Bitcoin. So, Callan, maybe from your side, and what you see from BitGet, are users in Africa engaging with crypto primarily as a trading asset, or are you seeing more and more interaction with the asset class for long-term capital appreciation and to hedge themselves on a long term against the devaluation of their local currencies?
Yeah, it's an interesting question, and I think to Hannes's point as well, you know, Africa and South Africa are two totally different markets. So we still see a lot of crypto trading. Obviously, markets and volumes are down at the moment, but in South Africa, you know, where we see the crypto adoption, and we've seen stable coins being used as a hedge against the rand, other countries as well, where they've got volatility in their currency, you know, stable coins have been adopted for an actual hedging purpose. So we see a lot of deposits coming in USDT. Users can now actually generate a yield off of that as well. So a lot of the exchanges actually produce quite decent yield rates compared to what you would get in a bank. It also offers quite an easy way to get a USDT bank or USD bank account if you want to compare it on a one-to-one basis. So I think exchanges now offer a one-stop solution where you can have your trading of your cryptocurrency, you can hold a US dollar balance, and a lot of the exchanges provide a card as well, so you can actually spend that via a card, which makes it quite a simple solution. So yeah, even though you might see trading volumes down, we still see the adoption coming in the likes of other products. You know, we recently rebranded to what we call a universal exchange, so we do offer a number of other products. On there is obviously tokenized stocks as well, which, you know, for the South African market has seen quite a good uptake. South Africa being a lot more of an investment market as to just a trading market. You know, we've got a very investment savings mindset, so we've obviously partnered with Ondo, and I think BitGet globally contributes about 75% of their volume. So, you know, South Africans can now come on the platform and actually invest as opposed to just trade. So yeah, we see a lot of different use cases for it, but the adoption rate is definitely increasing on a month-by-month basis.
Yeah, I think if you think about the trend of this conversation, what we've been hearing over the last couple of days, specifically at this conference as well, is there's a lot of focus on stable coins. I mean, it seems like this is the talk of the town as it currently is. I mean, it developed from where we saw cryptocurrencies, stable coins, and we'll discuss tokenization of real world assets as well. But we're seeing that use cases. I mean, specifically, we get clients of mine as well that deal with cross-border payments and remittances. Now they're using stablecoin to even decrease that friction. So they're putting more funds into the hands of the individual actually remitting those funds where it was usually taken up by traditional banks. So, I mean, from that perspective, Amar, if you look at stablecoins in general, is it evolving to such an extent that it's expected to replace foreign currency in general, or do you expect more of a parallel system within the traditional financial services world?
I think a replacement of traditional banking systems, let's call them that, is not a small task. These are really old legacy systems. To erase them entirely, it's not a likely possibility in the near future. So I think for the short, medium, and probably the long term, you're going to see a parallel economy run with it. That being said, you know, I'm traditionally in the traditional trading arena historically, but we've developed our own stablecoin, a rand-backed stablecoin, and the methodology here is that we see more and more people taking it up purely from the understanding of simplicity in it. If you look at your larger stablecoins like USDT, USDC, I think in the emerging markets you'd get large take-up of that purely because it's an easy way to get your hands on foreign currency. It's an easier to hold a high-value currency. As a South African, can you go to your bank and say, hey, can I have $10,000? You need validity for that. You've got to be traveling, you've got to be making a purchase, yet you can yield the value the dollar gives by buying a stable coin in a matter of seconds. But even taking that into account, with a rand-backed stablecoin, we still see more easier adoption from even the general retail trading consumer. It's becoming more and more mainstream. It could be the technology behind it, but I mean, I think it could also be just the evolution of how money works. You know, 100 years ago, you wouldn't wire money. You'd send a telegram. That's evolved now. You know, exists within a distributed ledger system. It exists in an instantaneous manner. It's what gives surety towards an end user having and retaining full control over something that has an actual asset value.
So, I mean, it poses an interesting question, and I'll bring that back to you, Amar. But so if you think about something like stablecoins, and like I said, it's a talk of the town, but just before we entered towards the end of last year, that was such a major topic, there was a lot of talk about central bank digital currencies. But it seems like subsequent to the rollout of the Genius Act and those types of legislation in the US, it seems like the whole world is almost backed off of the topic of central bank digital currencies. And I can understand why, because I try to figure out what is the benefit that it brings to the table as opposed to privately issued stablecoins. But I just like to get your view on that as well, is where do you think CBDCs fits into the world of stablecoins, whether there's a scenario where they'll run parallel, or is it similar to what I usually use as an example? Is it like religion? You want something that people can have choice in choosing between CBDC and stablecoins?
You know, that's an interesting question, right? And I'll try not to provoke any central bankers that are possibly around, but from an organic and I suppose native crypto person whose focus is generally in the building space, there would be celebration that, hey, this legacy dinosaur entity is now, you know, issuing a token. So you have more buy-in into the new ecosystem that's been created with digital currencies. But to your question itself, I mean, what exactly would the purpose be served with the central bank issuing that token? I mean, you're removing everything that the token itself is supposed to function as. There is a complete centralization then of it. You know, so I don't think it was a. It's not going to be something that actually stands true for a central bank to do as a replacement of their currency. Even running it in parallel is simply giving a consumer an option, like you say, but from an organic crypto mindset, I can't see the validity towards it. Why? Now, if you said to me, you know, a state entity has decided to, you know, start accepting various tokens as legal tender, that makes more sense towards the adoption on a large scale. But if the central bank's issuing the token, then I mean, it's simply just another form of the money they issue.
Thanks. I mean, and then just maybe staying on the topic of stablecoins. I mean, Callan, coming back to you. So we see a lot of use cases with stablecoins, real-world utility, savings, remittances. So there's those utilities that stablecoins bring to the market. But I think if you think about, I think something like 70 or 80% in the market or stablecoin usage is still for trading and for bot trading and those types of things. So where do you see from your perspective the utility in terms of what stablecoins are being used for?
Yeah, again, it's an interesting one. I think across Africa, especially, volatility in the currencies, we see a lot of it in use case scenarios there. You know, I come from a traditional trade background, and you know, we always had issues in African markets, trying to get money out of Zimbabwe, trying to get money out of markets where there's no liquidity. So I think from a liquidity point of view, and again, you know, to give people on the African continent a viable currency that has a little bit of strength behind it. You know, it's a coin which is easily available. And I think with obviously the infrastructure that's been put in place now with exchanges, with wallets, we see a lot more use case scenarios from a payments point of view. We facilitate a lot of OTC deals. So we have FX companies coming to us because they're receiving a lot of USDT. Obviously, they want to then change that back into ZAR or vice versa. So we see it a lot more across Africa as opposed to South Africa. I think South Africa is probably still used mainly from a trading point of view once it's actually in the platform. But I think across Africa, you're starting to see it used more on a trade-by-trade basis. And obviously, you know, I always say the use case scenario gets more and more interesting when you start getting the banks involved. We've had a lot of conversations with banks, and I think banks come to the market when someone starts to eat their lunch. So when the bank gets involved, there's a positive and there's a negative. I think they bring credibility to the market. Banks start to offer their own coins. We see ABSA looking to issue a gold-backed coin as well. So the banks really tend to get involved where they're losing a bit of competition or where competition is starting to take a bit of their market. So it's going to be interesting to see over the next few years, where that market goes, which banks issue the coins and which ones are adopted here locally. I think across Africa, it's probably still USDT. It's the most easily available. I think more infrastructure gets built out by the institutions as well. You'll see a lot more trading in stable coins. We've started to see it with trade finance, which is a great product for it. We started to see, obviously, tokenized stocks getting paid with the likes of stable coins. So, I think it's only going to lead to more and more use case scenarios. I think the stats from Chain Analysis was what? Sub-Saharan Africa, I think, transaction volume was 205 billion. I think 43% of that is stable coins. So it shows that there is a use case scenario. You've got nearly $90 billion worth of transactions in actual stable coins. So it's definitely not going away.
So maybe on that topic, Yali, we will get to you in a second, of course, but so when people start to use stable coins, I've mentioned now previously you want choice, and there's a lot of stable coins floating around, US dollar denominated, South African ZAR denominated. But Callan, maybe just a follow up on that. If you think about risk and counterparty risk, because we developed with a system with a client where they're able to take receipts of stable coins several years ago, and we looked at the various risks within the cycle. And one of it was the counterparty risk associated with the stable coin you select to facilitate the transaction with. But so what would you usually advise people to have a look at when looking and utilizing a specific stable coin?
Yeah, very interesting question, because I think everyone just thinks that all stable coins are created equally, and we know they're not. So when you're looking at a stable coin, say USDT versus USDC, you've got to look at the underlying factors that make that up. What makes up the underlying reserves? You've got USDT, which obviously has, I think it's US dollar backed. I think they've got some gold now that they've introduced there as well as a part of reserve, and then they've got US treasuries. And then you look at USDC, you've got, again, it's dollar backed, and you've got short-term US treasuries there as well. You've got to obviously look at the underlying regulatory framework around that. What suits what market. USDT seems to be a lot more adopted from a retail base, but also a little bit less regulated. USDC has basically audited financial statements every single month. They're MiCA compliant, which means it's readily accessed and accessible across Europe. So you get a lot more of an institutional type of focus around that, and it seems to be functioned or utilized more from an institutional point of view. In South Africa, Roy, obviously you've got the likes of ZARP, and you've got ZARU, and like I said, you've got the ABSA-backed stablecoin as well. It's really good to see that a lot of these coins are actually now backed by financial institutions, really well-established financial institutions, and I think that's what's going to give it the credibility. You've got underlying custody, which is obviously your foundation to any digital products that's going to be launched. So when the financial institutions get involved, I think it adds a credibility. The regulatory framework there is in place as well. So there's a lot of different factors to look at when choosing a stable coin, and I think it obviously depends on what suits the individual, what suits the organization. But it's definitely going to be about the underlying reserves, the regulatory framework, and that all has to be placed. We've obviously seen coins that have been launched and which have bombed and failed. And again, in the crypto market, you want as much regulatory framework in place. I know a lot of the time it does slow things down, but obviously you want the market to be as legitimate as it can be. So all those factors need to be in place when looking at a coin that's going to be suited for your industry or your personal use.
I think it summarizes well. I think from a South African context, we're specifically looking forward to stablecoin regulations. I mean, it's something that we've been clamoring for in the market for quite a while. So I think the market definitely needs that trust and transparency that goes along with it. So Yaliwe, sorry for waiting so long with the questions, but if you think about crypto and stablecoins, regulations, in my view, is always key. But there's always the question about how do you encourage regulation, innovation within a specific jurisdiction without stifling that innovation. So, I mean, if you look at the regulations around capital flows, monetary policies, regulatory control, how do you balance that financial inclusion and innovation with concerns around monetary sovereignty and capital flight? Because, I mean, specifically in Africa and stablecoins, there's such a big concern by government for the replacement of local fiat currencies by a US dollar-backed stablecoin, for example.
Okay, am I audible enough? So I think for me, there's two things. So you're mentioning, obviously, the regulator, you're mentioning the people, the government, but there's one thing, is simplicity. Because as much as we are talking stable coins, as much as we are talking access and all those things, people need to understand the why. What is the why? And I remember as we were discussing, so I had a conversation with a person that marketed Coca-Cola. Obviously, I know all of us drink Coca-Cola, right? So this person said there was one rule that they were given. And they said, don't explain too much. Go into these villages and tell the people 1 + 1 = 2. So they get to a spaza shop and they say, if you sell 1 bottle of Coca-Cola, you're going to get 2 rand, for example. If you sell 2 bottles of Coca-Cola, you're going to get 4 rand. The problem we have is the jargon. It's unnecessary. It's really unnecessary. People like familiarity. What is a stable coin? It's a coin that is backed 1-to-1 with an asset. What kind of asset? Don't talk to me about gold. Because how many people in Africa right now, as much as we know that we have gold, how many people have access to that gold and they even know the value of gold? Talk to me about something that is familiar to me. And this is why having stablecoins that are backed 1-to-1 with a local currency actually works. So the regulator also sometimes does not understand. So you cannot blame the regulator to say, okay, because they regulate things they don't understand. They have an idea in their mind and they have a fear. And I think there was one time that I was asking Nairobi to say, oh, you guys in the crypto space say you're going to take away the banks. I said, we're not taking away the banks. We just don't want the banks in my space. Everybody has a place. The bank has a place. Peer-to-peer has a place. So eventually we're going to get to your space. I need my crypto transferred to me by another person, but I need to cash it out. Who do I need? I need the bank. So the bank is in their space. They're not interfering in my transaction. I can decide what I do. If I received 1 million rands today, I would decide if I want to cash out 200 rands or I want to cash out 500,000 rands. Then the bank comes into play. If I cash out 500,000, then the regulator now comes into play. So everybody has a space. So there's that fear of saying, I do not have, okay, we're taking out. I think it's the wording. I think for a very long time we've used the wrong wording because somebody asked me, what is blockchain? I say it's a database. The only difference is that it's a different type of database. A traditional database, information can be deleted and tampered with and messed around with. But the blockchain database, it has a record of transactions, it's got a fingerprint, it's got all those things. We just need to simplify the space enough to get the people in the right place where they need to be. I think for me, the jargon needs to go. Every person has a place, from the community, the institutions, and the regulators, as long as we've got the right wording in place.
Yeah, I think that's very important. A couple of good points made there. I think in terms of trying to translate it to the layman terms, that's very important. I mean, if you talk about tokenization, stablecoins, effectively they're one and the same thing. I mean, trying to explain concepts like what is Bitcoin, it's like trying to explain to someone what's the concept of gold. I mean, there are similarities there, of course, as well. But I think, Yaliwe, sticking with you, so when we talk about the regulators and regulations in general, I mean, we saw a lot of regulations being developed in terms of stablecoins globally. We've got the Genius Act, we've got MiCA, we've got the Hong Kong Stablecoin Ordinance. Most of the jurisdictions now globally are governed by some form of framework that governs the digital assets. But so from your perspective, of course, you'll probably agree that Africa is quite unique and quite dynamic specifically in relation to exchange control regulations, fragmented markets. So how do you create a fit-for-purpose framework for crypto and stable coins in an African concept? Okay.
Interesting. So I look at South Africa as the big brother of Africa, right? Almost every African country looks up to South Africa. That we can't run away from. So it's very easy to access Rand in so many countries than it's easy to access another currency in South Africa. So one thing is being able to manage the exchange of currency across the continent. Because there's one thing, the dollar is very dominant. If I need to travel to another country, I'd rather have dollar than have an African currency. But as South Africa playing as the big brother of Africa, it will be very beneficial for the country to allow African countries anywhere to be able to exchange Rand to Malawian Kwacha, Rand to Nigerian Naira, Rand to Ugandan shilling, because South Africa is looked at as that. So stable coins is just being able to have that exchange, you know, kind of whether your currency is more powerful than the other. If I want to do trade, why do we have to exchange the money to the dollar? Why can't we trade just directly from Ugandan shilling to South African rands? And I think stablecoins play a very critical role in that. If we have that access on platforms, we don't need to take it into USDT. What makes USDT powerful is because USD or US dollar has been very powerful on the continent. So it was easily adaptable. But if we can create that environment where African currencies are able to be exchanged without having to say, I have to first change it into the dollar and into this place. And I think stablecoins have that power to be able to change that narrative.
Yeah, I think it's definitely going to be a completely different environment and opening borders within Africa as soon as we've got that central currency to operate within Africa. I mean, but I think, Amar, just to come back to you, we've spoken about crypto and we've spoken about tokenization in the form of stable coins. But what about the tokenization of real-world assets? What do you think needs to change in the environment in South Africa and Africa so we see larger adoption by the financial institutions and the traditional market in South Africa?
That's an interesting one. We were in a roundtable earlier on, and it was Jimmy who actually made a comment where exactly does regulation play a role in the understanding of what tokenization is? I mean, I could say I'm tokenizing this table. You know, what does that make it? Does it make the token a derivative of it? So I think, you know, when we talk about tokenization of real-world assets, we need to create the understanding of purpose behind that tokenization. There's so much that can be done in the crypto space, so much that can be done on-chain, there's so much that can be done with DeFi technology, but it's important to also stick towards not just creating a real-world asset, but it should be a real-world solution or something beneficial. You know, for one, I would see the property market as an excellent one for tokenization. It's worked significantly well in many, many countries. You can do tokenized partial share ownership as well. Naturally, stocks are definitely something to be tokenized. But I think the adoption of this leads further than just the tokenization into a digital era. It's about creating the awareness of why it was done in the first place. You know, if you're talking about a cryptocurrency and why adoption's lower, I used this analogy the other day where if I gave you 100 Rand, you know what that 100 Rand is. Right? You could buy whatever is worth 100 Rand. And you've always known that. But if I gave you 20 Ethereum, to any random person, it means nothing really, unless you have the understanding of the intrinsic value behind it. So the exact same analogy sits true for the tokenization of an asset. What exactly is the value of it? Or are you tokenizing to simply create a derivative of it?
So, I mean, it's interesting we think, I think towards the end of last year, I saw the S&P 500, I think they applied with the SEC for the tokenization of their shares. So we might be sitting with a situation where you've got parallel systems running on a blockchain in addition to the traditional, if I call it, ledger that these exchanges keep. So definitely, I think there's a lot of integration with stablecoins, tokenization, agentic finance. That's, of course, a large talking point as well. But I think maybe to bring it back in terms of the final question, Hannes, I mean, from your perspective, in Africa and South Africa, tokenization of real world assets, is the country and the continent ready for it? And I mean, because as the focus moved away from financial stability and access, or are we able to open up the African market to the larger world with the use of tokenization?
I think it's a process. I think we're going to start, well, we started with NFTs that went up and it went down. I still hear people saying they're holding on to the bored apes. But it was a good experiment. I mean, we need to look at these things as experiments of what the system is able to accommodate, and then we take it further. I think NFTs first, now we're talking about tokenized stocks. We're looking at it. I know BitGet is doing it. I think that's the next step. You can tokenize a stock. Now we can start going to a deeds office and saying, hang on, you can tokenize a share, you can tokenize a property, because it is just another database. I like Olivia's comment, it's just a database with secured entries. Anybody who's ever transferred a property is particularly painful, and it's a PDF-based process. So we are still moving to someone in a court and a rubber stamp. It's ideal for tokenization. It's ideal for RWA adoption. I'm looking at this and thinking it's almost unfathomable that you can transfer property in 10 minutes. Normally it takes 2 weeks. I think Africa is absolutely ready for that. I think it's more the issues now. Let's go through the process. Let's go through tokenized stocks. Let's go through the sports tokens and those things so we can get people used to this. It's all about, humans don't mind change, but they mind sudden change. This is how you get people up the curve safely, get them to adopt it, get them to get ownership responsibly, get them to transfer ownership responsibly, and there we go to the more valuable assets. I think the government's got a role to play there. I think liquidity is not that important in a RWA market where you trade something like properties, but you get someone to get used to the liquidity of some of the more volatile assets. You can then move to the stable assets, and that's where you got to go to governments and say, now we need to move this thing to a blockchain as well. I think there's one more interim step where, and I thought about this, what if you can get the insurance companies who insure a lot of the fixed assets, the real estate, get them to start transferring these assets between themselves on a blockchain before you go to the deeds office. That could be a very good experiment with a limited circle of participants. And if that works, you can transfer the property from, say, Sanlam to Old Mutual. The moment it transfers from person A to person B at the deeds office, that could get people used to it as well. And then you can move to that final step.
So I'm curious about that, because there's always the question, do you go private permission blockchains or you go open permissionless blockchains? In your view, if you think about tokenization such as these office properties, those types of things, where do you look towards in terms of on what blockchain do you tokenize?
I think we need to get closer to the time, but I think this will be a more permission blockchain, because you do need a more centralized authority to sign this off. You do need someone, and I'm going to use the deeds office example as well. You can even use the vehicle database as well, eNatus, but let's stick with the deeds office for now. I do think you need a centralized person in the beginning to oversee this, to endorse this, but you no longer need the master of the court, etc., etc. It can be a designated individual with all the OPSEC that you need. And I think once we get that right, we can then start decentralizing from there. I think, again, it's a journey, it's an evolution, but I think it starts with a centralized concept, and we can then see how it works from there.
So, I mean, the final question that I had for the panel as well was in relation to where do we see the future moving? Is it the killer application? Is it with stable coins? Is it with cryptocurrency? Is it with the tokenization of real world assets? In my view, it's all of these above. I mean, not sure whether any of you have a different view in terms of where do you think the killer app will lie, or whether there will be a transition from one to another. I'm not sure if any of you have opinions.
Okay, I can take the first one. So I think it's a tiered approach. I believe stable coins are going to be first. Why? Because nobody needs to understand what's happening in the back end. So obviously there's so many use cases around stable coins. We're talking about cross-border, transactions. Sometimes people don't even understand that they're doing cross-border transactions. But what is usually the killer is the fees behind that transaction. You find that somebody is paying 10% of 4,000 rands, which is 400 rands. But with a stable coin behind it, they're going to get a cheaper service. So they're already using stable coins. For companies supply chain and all these other things that are going to be happening. So I think it's really a tiered approach. Reward assets are great, and they're going to happen eventually, but I also feel like Africans don't have a sharing problem. Because reward assets are more about, we're talking about fractional ownership and all these other things. Africans have been raised in extended family setups. They don't have a sharing problem, they have got a value problem. They don't understand that I can use this mechanism that we already have to create value, and we can literally maybe invest in something and put in something small here and something small here and be part of this. So I think also with reward assets, we need to put in more education to get people on par. But I think like stable coins, crypto has always existed, and it's always, I think, been a catalyst for scams. So sometimes people shy away, but with stable coins, they won't even know they're using it. Reward assets will be second. So I think it's a tiered approach on my side.
I think just to add to that, because, there've been a few discussions today where people have said, give us a real world scenario, how does blockchain make your life easier? And going back to Hannes's point with, just say, tokenized stocks, we both come from traditional finance world, and if you look at how long the blockchain's been around, how long tokenized assets are, where you can buy it now today within a matter of seconds, and that can be in your account. In traditional finance, in South Africa, we went from a T+5 model to a T+3. And this was massively celebrated across the market as this unbelievable new step in the settlement process. Europe had a T+3, it moved down to a T+2. So where you look at blockchain and you look at what tokenized assets are done, you're literally buying stock in a matter of seconds and being able to sell it in seconds. So if there's a use case scenario, you're like, it's been solved already, it's just got to be obviously adopted. But it's just one case to show how it's benefited the financial markets, and you will see it rolled out. It will definitely come. So yeah, that's obviously making your lives a lot easier. But yeah, it's just one of the technological advancements just across your basic stock markets, which has been in existence for hundreds of years, which hasn't really evolved. So yeah, it's just my 2 cents.
Yeah, it's interesting. So I think slowly but surely coming from a traditional financial world of Forbes Mazars, when I spoke to some of the partners about digital assets, they thought I was crazy. And fast forward 10 years, and now they're telling me, but it's instant settlement. And this is what I've been telling you for years now. So it's interesting to see the way that we're moving now. But I think we almost run out of time. Potentially we can take one question. I'm not sure if there is any questions in the audience. It is very noisy sitting upstage here with...
Maybe while we pass the mic around, one additional comment. If this is not all complex enough, we still need to add agentic AI on top of this. And I like Aliva's comment of the ecosystem and there's no particular winner. I think agentic AI will ultimately determine who's got the best rails and who can move the fastest. And I think we can just keep that in mind as well.
Yeah, that's a massive topic that a lot of people have unpacked yet. Any questions? One quick question there at the front.
In 40 seconds. No pressure. Oh, my.
Is it working? Yes. Okay. Just a quick one. Is there a relationship between smart contracts and tokenization? This idea just came to me as you were sharing your ideas. Smart contracts as was introduced by Ethereum. Is there any relationship there? And if there is, what is it?
Okay, I think I've got 4 seconds. I think we're going to take that one after the conversation. But if we're allowed to, I think smart contracts, it just allows for us. You see, on a normal contract, right, there can be a breach. So I guess if you're talking about tokenization, you've got this building, this lovely building, and you're allowing for fractional ownership. And obviously people need to, whether it's you, the seller, or there's a buyer, there needs to be a contract in between. So smart contracts are just self-executing contracts because they've been coded in, right? So there is a relationship. There is a relationship there, depending on what kind of contract that you want to put onto a smart contract.
Thanks. That's all we have time for. Can we please get a round of applause for the panel?